Moving on, as promised, we're taking a closer look at the movement in the markets this week. On Wednesday, we were joined by Luke Beckman, Grain Sales Manager with Central Valley Ag. Luke, let's kick off this conversation heading overseas, looking at some energy concerns over in Europe. How is this shaking up the markets this week?
Well, Alex, the energy conversation is something that we talked about this winter as really being a key theme for our commodity markets over the course of 2022. And that kind of died down in June, July as the markets retreated really for your energy products, crude oil, natural gas, et cetera. Things have really been reignited as of late. And if you look across the pond at Europe, the issues start right there. We have the issue ongoing in Eastern Europe with Ukraine and Russia is the key gas supplier to Europe. And as we approach winter, this should be a time where inventories are building and they're prepping for a cold winter and they're sourcing fuel so that they'll have adequate supplies to heat homes and run their industrial economy the way they want to. And so that's been a problem. Russia continues to control the gas supply, and that's a lever in negotiations with the conflict going on in Ukraine. And so it's led to natural gas prices reaching all-time highs. Energy prices for residential and commercial usage in Europe are at all-time record levels. And so this has a spillover effect on our commodity space, no doubt. You've seen crude oil reverse course. It was, continuing to trend lower, and we've seen a little bit of a bid come back into the energy space this week. And so that underpins commodities as we look at what's going on with corn and soybeans in our space. As we ask the question, are the funds getting interested in commodities again? We saw them exit the space in late June, and that really took us from the $7 December, $15 November futures, and saw some deep corrections down into the 5s for corn and down into the 12s for soybeans. And so this week, you've kind of got the commodity story running again. You've got some hedge fund interest in commodities, and I think we have to look at energy as we really go into this new marketing year in terms of what's the potential going to be. So that's the big macro issue at play.
So that's a global concern. Another global concern right now, supply and demand. That's something that we're looking at domestically too. Let's start with global production. Conversations about lower corn in the EU and China. What's that doing to the markets?
Yeah, really 3 to 4 weeks ago, we really started to see production estimates for corn in the European Union, which isn't a huge global player, but it's all part of the pie. And you throw in the issues going on in Ukraine, and it all matters. And so you've had dry, hot weather in key portions of the European Union, and so their production estimates have come off a fair amount, 15 to 20% in the last 3 weeks. As that has intensified. And so that's part of your global corn carryout that's going to come away, and it's going to redirect some trade flows. Whether that comes from the U.S. or not remains to be seen, but it's lost production in any event. And then recently, here in the last few weeks, you've got kind of the same issues brewing in China. You've got some hotter and drier conditions there that potentially could be trimming into their crop. That's going to be a little bit more of a black box, really hard for us to know for sure what the production estimates look like in China, but that's something that we need to watch. And probably the third thing is just the U.S. crop. It seems like in the last 2 to 3 weeks, we haven't been finishing this crop real well. It's been hot, been dry in key places. And so we'll see, if that manifests itself in a lower yield estimate by the USDA here in early September. You've got a lot of your private tour yield tours going on this week. And they're finding maybe yields that are a little bit less than what the USDA reported in August. And so all of those things kind of converging this week to really create a new sense of bullish optimism in both corn and soybeans.
Luke, as you and I were chatting, we were talking about it is a little bit early to see those pre-harvest lows, but not the first time we've seen something like that. Tell us a little bit more about that aspect of the story.
Yeah, seasonally, Alex, we really don't see lows in corn, soybeans, your row crop markets until sometime in September is usually a pretty safe bet. That can drift into October as well. But usually right after Labor Day, we start to have those conversations. Corn found that 560 mark in early August. And so did we find a pre-harvest low in early August? I think that's the question. So it's certainly feasible. We'll see how the commodities, react from here. But if we did find a pre-harvest low, there's certainly a good case going on fundamentally and from the macro perspective to say that corn and soybeans are fairly well supported although I'd say corn has probably a better story than soybeans.
So looking at the big picture, Luke, all of this is impacting our producers' risk management decisions. As you look at this week's trade, possibly this past week or this past month, what are some important things our producers need to keep their eyes on?
Well, I think as you look at old crop, if there's any producer sitting on any old crop inventories with the cash inverse that we have, it's wise to get rid of that crop. If you're still bullish, you can maintain ownership on paper. That's the wise thing to do. There's no carry going into next summer. You can dump that crop, get the cash for it, and re-own July futures or buy calls, if you want to maintain upside. There's no reason to carry physical corn into an inverse like this. On the new crop side of things, as we look at the charts, December corn 688 is a key retracement level. If you're looking for targets and need to continue to get some new crop sold, that's a great place to engage, if you're looking at new crop sales. And then I think 2023, we started off the conversation today talking about energy. And there's some issues there, and it's going to cause some support in the fertilizer and the input space. We did read of a couple fertilizer plants shutting down in Eastern Europe this week, and as Europe goes, so goes the rest of the fertilizer world. So you're going to have higher input prices for 23. We kind of know that, but if you can get some 23 inputs locked in, I think you need to look at 23 selling opportunities for both corn and soybeans to make sure that you're locking in a margin. Focus on the margin. Don't focus on the prices as you think about 23. We're just in a really high input environment. On the soybean side of things, we ran up to resistance today on Wednesday, right at 1484, 1489 was an old high, and we kind of failed. So soybeans are kind of caught between this slight uptrend and that 1490 area. So again, great spot to sell some beans. If you're behind, this is a good spot right in here. You can probably get $14 cash right off the combine. So great opportunities for both corn and beans with the rally this week.
All right, Luke, a lot of great things to think about. Thanks so much.
Thanks, Alex.